In this video, we're going to cover advanced engulfing candlestick pattern. So this video is going to help you to understand engulfing candlestick, and also you are going to understand how to use advanced engulfing candlestick patterns. And also I'm going to show you how to make sniper entries using this advanced engulfing candlestick pattern. So you're going to understand how to make sniper entries. So if this video is something that you like, please consider subscribing to the channel and like the video. So let's begin with the video. And also, before we begin, please read the disclaimer so that we can start with the video. The first thing that you need to understand and learn is how a candlestick is formed. We have a bullish candlestick here. This is a bullish candlestick. And then we have a bearish candlestick here. So on a bullish candlestick, that means the market is moving to the upside. On a bearish candlestick, that means the market is moving to the downside. So to understand them very clearly is to check the open. We open here, but we close at the top. So that means price started from here and then it shoot to the upside. The same thing applies on a bearish candlestick. We opened here at the top and then we closed at the bottom. So that means price right now is negative. Let's say negative 3%. Here it will be maybe 3%. So that means the market is moving to the upside. But a candlestick have something that we call the higher price, and these higher prices, they are being created by the wicks. This is the wicks here. We have the wicks here. This is the wick. Mostly this candlestick will create what we call a spike in the market. Mostly you will see that you are being stopped out by these candlesticks, by this wick, if I may say, and they happen at the top to make a high price, and also at the bottom here to make the lowest price here. This will be your lowest price. That's how you should understand them. This is the wick, this is the wick at the bottom of the candlesticks. And then we also have the body. This is the body of the candlestick. So this is how you should understand candlesticks. They are not difficult to understand, but this is just the basic to understand candlestick. So right now, let me show you how a engulfing candlestick is formed in the market. We have what you call an engulfing candlestick. This is also a pattern because it consists of 1 and 1 is equals to, this is a pattern. Here we have a bearish engulfing candlestick pattern. This is these two candlesticks here. And look closely, guys. We have the body and we also have the body here. But this bearish candlestick here is having a bigger body. We have a bigger body here, and we can see the bullish candlestick is having a smaller body. So to understand this, guys, you have to look at the bodies. You have to look at the body and the current candlestick. You can see this is the previous candlestick, this is the current candlestick. But looking at these bodies here, we can see that the bearish candlestick is the one with a bigger body, excluding these wicks here. That's how you should understand it. By looking at this, we can see that, okay, the bullish candlestick doesn't have a bigger body, but the bearish candlestick is the one with a bigger body. So that means this is a bearish engulfing candlestick. Don't forget the pattern. That's how you should understand it very clearly. So let's look at this next one here. We have the body, a bearish candlestick, and then we also have a body of a bullish candlestick. Which one is bigger right now? Is this one. You can see closely. This body is bigger. So that is why we call this a bullish engulfing candlestick pattern. That's how you should understand very clearly. Just look at the bodies and then focus on the candlestick. You can see bearish and then bullish. This one is going down, this one is moving to the upside. So that means right now the market was like this and then is shooting to the upside. This goes to show that there's a huge momentum or a buying pressure in the market that is focusing on moving to the upside. That's why you see a bullish engulfing candlestick pattern. But most people don't understand how to trade this pattern here. Most people here on the bearish engulfing candlestick, they will sell here after this candlestick close, looking for the market to push to the upside. Because most of the people, they like to risk a lot. They will see something like this in the market, a retracement, and then while price is around here, this is where they will blow their account. So we have to avoid those kind of silly moves in the market, because the market will bully you and there is no one to blame because you are the one who executed that trade. So we can also see that this week here and this week here, this one is having a higher price, this one is having a lower price. You can also say this is a higher high. Oh, what I mean is a lower high, because we can see the market is moving to the downside, and here at this lows here, this will be your lower low based on this simple market structure pattern. So the same thing will apply on this side again, but look at this one here. Here right now we have a low and then we have a low, but we have a lower low on the bullish engulfing candlestick pattern, if I may say, on the bullish candlestick that created a bullish engulfing candlestick pattern. That's how easy it is to understand it, but we will take some notes when we move forward, because right now, if let's say for now the market, this is the market here, we already know that we have this structure. Everyone knows this structure here. This is the basic structure of lower low, lower low, lower low, lower low. This is the lower high, lower high, lower high. But in reality, the market will never move like this. If we look closely at this area here alone and focus it on the side, we have this lower low and then a lower high. But in reality, the market will move something like this. It will break internal structures like while still making this lower high before it can continue to the downside. This is how the market will behave most of the time. So because right now we are going to learn how to use that engulfing candlestick pattern properly, you will understand that this structures here, this structure, the main structure that you are going to see in the market every day, is the one that you are going to see when that candlestick that we are going to talk about is forming. So you just have to take some time and backtest this. You will see those patterns every day, and you'll see some of them when we move forward with the video that you have missed during last week. And we also cover examples on Bitcoin, on crypto, gold, and even the forex market, even the indices. So for now, you already know that this is a bearish engulfing candlestick. That means we will be looking for the market to move to the downside. But what if you sell here, then the market starts to shoot to the upside? It's because you chose the wrong engulfing candlestick. And also you have to look closely on this wicks here. If let's say for now you see a bearish engulfing candlestick like this, we have, let's say something like this. Let's say something like this, guys. And then we have a smaller wick on the upside. And also let's draw another one on the side so that we can see everything clearly. And then we have this one. So by looking at price action here, you can clearly see that price here is pushing to the upside based on this candlestick alone. But look at this here. Price is pushing the market to the downside based on this wicks here. You have to understand how to read wicks. Okay, that is why even in here you can look closely. Price is trying to push the market to the downside, but there was not even a huge momentum here. That is why you see smaller wicks following price after. But if we look closely, this is a bearish engulfing candlestick, and then we see the market moving to the downside. And we can also see price here is starting to show some bullishness in the market. Even by looking at these candlesticks alone, you can understand how the market might behave in the future. But also we can see that we have a push to the upside here, and also we have a bullish engulfing candlestick here. So every time when you see a bullish engulfing candlestick here, you have to understand where you are in the market. You have to be at least on a potential reversal zone, because most of the time a bullish or a bearish engulfing candlestick is a sign of reversal in the market, but it doesn't always behave that way. I'll even show you when we move forward with the video, because there is a lot of examples that I want to show you. So we have a bullish engulfing candlestick here, but here, guys, you see this two here and this one, this bearish engulfing candlestick and this bullish candlestick. This is the candlestick that we are not going to use in this video, even if the market is shooting to the upside. It's because we are going to use these candlesticks here. Let's look at them properly. We have the bearish candlesticks here, bearish engulfing candlestick patterns. Let's look at the highs here, the high, and look at the high. We have to focus mainly on the bearish engulfing candlestick, a higher high. Also following that, even on a bullish engulfing candlestick, we have to focus only on a bullish engulfing candlestick with a lower low. What I mean is that the previous candlestick, this one, has to have a low, and then the next candlestick, which is this bullish candlestick, has to have a lower low, meaning the low has to be lower than this one here. This one here, we can see we don't have a lower low here, but we have a lower low on this side. So that means this one, we are not going to focus on it on this video. Even this one, we are not going to focus on it too much. So because right now we have the two main candlestick patterns that we are focusing on, let's look at how we are going to trade this. We have this one here, the bearish engulfing candlestick. Most of the time you will see that price is likely to come and retest here. This should be your point of reversal here, maybe let's say in the lower time frame, and sometimes it can even reach here. This will be your point of reversal number. And lastly, we have another point of reversal, which is this area here, point of reversal number 3. So if you are a trader, you will understand that here, this is where you don't want to see price moving above. This will be what you call an invalidation. So it will depend on which trader you want to be, because the market can reverse here, can reverse here, can reverse here. Let's say your stop loss is here. So that means from this trader here, you are risking too much. This one here is risking less, a huge potential gains. So you have to understand which one are you going to be. Are you going to be trader number 1, 2, or 3? You can leave a comment below so that I can understand which trade setups would you prefer. And if I give you some advice, I will never enter, this is my personal experience, I will never enter a engulfing candlestick on their close, because mostly price likes to retrace. This is the first reversal. You will see them on a chart. The same thing will apply on this side. If you are building a trading strategy, you have to focus on the key areas, the market structure patterns, key zones, and an area of invalidation. An area of invalidation means that you don't want to see price moving above or below your invalidation level, because it will invalidate that trade setup. If price crosses that invalidation level, that means your trade setups has been invalidated. That means you have to move on to another pair and find something else. So the same thing will apply on a bullish engulfing candlestick. You have to look for an entry here. This is your entry number 3. This is your entry 2. This is your entry 1. I like to call this one a weak entry. So if you are looking to enter the market around this area, price, just know that it might even consolidate a bit and then move to the downside, consolidate a bit, move to the downside, and then even maybe stop you out. So that means you have a huge loss from here. But if you are entering at this area here, you are risking less if you calculated your risk properly. But I do understand that even if someone enters here on the entry 1 and someone enters here on entry 3, this person can lose, let's say $100, but this one can lose $400 while having a $500 account. It's because this one has calculated their risk more than this one. Okay, I hope you understand it in that way. So let's move forward to see some examples that I took from the previous market. Let's look at this first one here. We have the first, the second, the third, and then the fourth. We can see from this bearish engulfing candlestick, we have the one that we are going to use. Price did not even come and retest here. So that means we avoid. Even on this one, we can see closely. Price didn't come and retest here. That means we avoid. We have another one on the side. This is entry. Price tapped on entry 1 and then shoot to the downside. But from here, you can still move on to the lower time frame. Lower time frame to look for a smaller risk or a smaller potential entry in the lower time frame. But that story is for another day. So let's look at another one. We have this candlestick. Even this one, if you entered on the entry 1, that means you had a little bit of a drawdown here before the market can move to the upside. But let's look at this one. Here we can see that we have our entry 1, we have our entry 2, and almost at entry 3. But you can see that you won't have to panic for this thing if you are taking trades from the entry 2 and entry 3 model. That's what you should understand. So basically, most of the trades that you take from entry 2 and entry 3 will be snap upper entries. So you won't even sit in the market for too long to see the market moving. But there's a lot of theory into this, guys, because there's a lot of different candlestick and behavior, and even the lower time frame confirmations and structures that you have to put into your trading style. This is just a video just to show you how to use the advanced engulfing candlestick. So let's look at another structures here. We can see from this area, we can see we don't have a bearish engulfing candlestick. This body is small, this one is big, so we are not going to use this one because we don't have a engulfing candlestick. And also we have an engulfing candlestick, but the problem is one here, we don't have a wick that is trading below the previous low. So that means the bullish engulfing candlestick doesn't have a lower low. So that means even this one, we are going to avoid it. And then we have this one here. This is what I call double manipulation. You can see we have this one here. Let's say this is your invalidation. That means price trade above your invalidation. Let's say you are in an entry here. That means you'll be stopped out and then the market will move to the downside. That's how the market will behave. You'll never make profit every day. But if you have entered here, let's say here on entry 3, you'll lose a very small money here and then you let the market behave. But then there's another one here. We have another one in this area. We have a bearish engulfing candlestick here, and also we can see price traded at entry 2 and almost at entry 3. Then the market shoot to the downside if you took your trade on entry 2. Okay, if you took a trade on entry 1, you'll see the market moving to the downside and then pulling back to enter into entry 3 before it can shoot to the downside. This is why you should focus on your psychology, because you might even close the trade. Let's look at this one here. We have another one here. This one even traded at entry 2 and even on entry 3, and then the market moved to the upside. But if you're using the lower time frame, I believe you will even enter the market if right here, this is where your entry will be if you are using the lower time frame confirmations. So let's look at this area here. Here we don't have anything, on the side, we don't have anything. Okay, we have another one here. You can see it traded below the previous candlestick's low and then close with a bullish engulfing candlestick. But the problem is one on this analysis. Price did not even come and retest here. That is why you see a move to the upside. So then that means we have to wait for another one. Even this one traded below the low. But if you're taking your entry on the entry 2, you'll be invalidated immediately, because I don't think there's a price action on this area to show that there is a sign of momentum to the upside in the lower time frame. So now look at this area. This is perfect. We have this one and then we have this one, and then the market was moving to the downside, almost at entry 2 on this area, here on entry 2 and 3, but price was just making some silly moves here. That is why I said that price can make some silly moves. You just have to backtest so that you can understand different price action patterns in the market. So let's look at another example here. This is your full analysis that you have to understand. The first thing that you need to focus on is key area of entry. This is your entry, this is your entry, this is your entry, this is your entry. We are avoiding entry 1 because we already know that it's high on risk, so we are avoiding entry 1. And also you have to find these candlesticks on your key zones, maybe on demand zone or even the supply zone. And also another thing, you have to focus on market structure. So to combine this, let's say we are focusing on this one, we have to find the demand zone around here, because we already know that price manipulated this low, and then wait for price action to give us this pattern here before we can enter the market to the upside. That's how you should keep it this simple. And also don't forget the area of invalidation. This is your area of invalidation. Let's say you see this pattern here, but then you don't know where's your invalidation, but you are looking to enter the market in this area. That means you'll be waiting for the market at least not to touch or trade below this low before it can shoot to the upside. And obviously in the lower time frame, the market will give you an opportunity. Let's read gold on the 1 hour. This is based on the analysis that I made before. If you read price action starting from this side to this side, you will see those patterns very clearly. This is the 1 hour. We can see we have one here, we have another one here, we have another one here, we have the bigger one here. This one, no, because this is a bearish candlestick. We don't have another one. Let's check. We don't have anything else. Okay, we have another one here. The market shoot to the upside. I don't believe I see any patterns again here. Okay, we have have another one here, and then price shoot to the downside. You can see by looking at this price chart here, we can see a lot of them, even this one almost, but we can see the market was moving to the downside. It was just giving us a signal to see where the market made. This is the gold on the 1 hour. Let's look at gold on the lower time frame and see. And now this is gold on the 15 minutes time frame. Even if we start to read the market from this area going to this side here, you will understand how price behaves. Let's start. We don't have anything from this lows, and then we have something here. The market shoot to the downside. If you are scalping, then this is good for you. Then let's look at price when it's shooting to the upside. We don't have anything. Even here, we don't have anything because price did not trade. This candlestick did not trade above this candlestick's high. And then we don't have anything here. And let's see. Okay, we have another one here. Price was just shooting to the downside. And then we have another one here. Price shoot to the downside. By the time of making this video, I saw this one here. Even this one here, you can see price is trying to push the market to the downside. So let's look at another pair because we have to understand this properly. More examples will lead us to understand this engulfing candlestick pattern properly. But then if we look closely, this one is the one that traded on entry 2. This one, none. We don't have another one here. We don't have another one. This one on entry 2 and 3. This one is none. Even this one is none. Okay, that's how you should understand this price section. And also look at the wicks. They will give you an information where the market is likely to push. If I may say, this candlestick here, again, this is a bearish candlestick. If we look closely at the wicks here and also look at the price sections here, you can see this wick is small, this one is big. That means price is trying to push the market to the downside. Even on here, price is trying to push the market to the downside. It's just that this one did not retrace back. This one here did not retrace back. Did not retrace to move to the upside. You just have to read candlestick like a pro. So let's move on to another example because I don't want this video to be very long. This is the US 100. All of this, I just took them on the current price chart. This is the US 100 on the 5 minutes time frame. By looking at this, look at this candlestick here. It's like this, almost the same wicks. It's the same thing as looking at price action like this. The same wicks. There is no momentum. That means price is still trying to push to the downside and this one is trying to push the market to the upside. So the market is just ranging here, making some spikes to the upside and to the downside. So look at this candlestick here. Price just shoot to the downside. And also look at the wicks. You can see the wick here is trying to tell us that the market is trying to push the market to the downside. Even this one here, even this one is just that is very small, but there is no entry on entry 1, entry 2 and entry 3, and then the market is moving to the upside based on this alone. Okay, so this one, guys, is just very clear. You can see this one here, it's very clear. It shows that price is doing something like this. We have a huge momentum here. On the week, price is trying to push the market to the upside. Also, this is a bullish engulfing candlestick pattern, and we also have another one here. Look at the wick. This wick's, guys, you can see the wick will tell you more information than you can think of. If you focus on the wicks, you'll see that price is trying to tell you something. So let's look at another example. We have a Bitcoin chart on the 50 minutes time frame. This is the current market chart. This one is just a mess. This one is just a mess, guys. By looking at price section here, you can see that, okay, another one here. Even the wicks are telling us the market is trying to push to the upside. But then suddenly, price decided to, if you entered the market, that means you'll be stopped on this trade. Here, there's nothing here of a major price action. Nothing here, nothing here, nothing here. And then suddenly we have this. You can see the wick here is telling us a story. That is why you see price retraced back and then starting to move to the upside. That's how you should understand how this candlestick behave. But another thing is that don't forget the entry 1, 2 and 3. If you focus mainly on this, you'll be good. You will reduce the risks that you were taking in the market by focusing on this one candlestick pattern. But there is a lot of information that you to understand. Because this video is going to be long, I think I'll just cut it from here. And also, if you want this free PDF, you'll find it on Discord and Telegram. Stay safe and always use a stop loss. And subscribe to the channel if this video was very helpful.